Hello, you're watching Proactive. Joining me is Zephyr Energy CEO Colin Harrington. Colin, very good to speak with you this morning. You've released initial results from the State 36 2-hour production test. Can you
Correct.
walk us through how the test was conducted and what you saw from the well during the test?
Sure, absolutely. Well, look, first and foremost, we saw great deliverability, really good, strong initial pressures. And the way we conducted this test, it had multiple different parts of the process. We experimented with a number of different choke settings and rates so we could determine both the short-term and the long-term potential productivity of the well. What you do is you bring it on gradually in increments as the well cleans up, and then you adjust up and certainly try to see where the upper end is. So highlights for me, we saw good peak rates, 1,350 BOE a day. That was still really choke constrained. And that's, because, and we'll talk about this in a minute, but we saw really strong liquid response here, much higher than we expected. We could have tested higher, but we didn't want to do anything that could ultimately impact those liquid rates. So we elected to be conservative, keep it choked, but certainly try to see where the well would flow best and most effectively. And we'll continue to do so. But the second main point here, and this is even more important than where the rates were, is that, as I mentioned, the GOR, the gas to condensate rate here in this case, was hugely positive. As you remember, when we did the State 16-2, it was a gassier well than expected. Here, what we're seeing in the southern part of our acreage is that we are more liquids rich than we expected. It's hugely positive for the overall economics, not just of this well, but of the larger play. So that was very positive. We were running, well over 600 barrels of condensate a day. And lastly, and this is a smaller point, but it's also important to the economics, we saw almost no water through this process. That's really important because water disposal costs can get expensive in this part of the world. So to have a well that's producing a liquids-rich well with almost no water, certainly helpful for the LOEs as we move forward. So that's kind of the high-level findings that we've seen so far.
Colin, you mentioned you've been producing liquids and significantly more than expected during the test. How did these volumes get sold to market?
Yeah, so what we did, we had a refinery come and sample the volumes first. They tested it. It's a highly attractive barrel. The condensate API is about 57, 58 here. Very attractive for the Utah market because it's a light barrel that blends well with the waxy crude from the Uinta. So after it was sampled and tested, we have been trucking the volumes up to the Utah market where they have been accepted and we're selling. So we're getting a price that's just below WTI, and that includes the trucking costs to get it up there. So really nice barrel, and we're excited to see to be able to sell already produce volumes, and we look forward to selling a lot more.
What are the broader implications for the Paradox play, Colin?
Yeah, so this is really important. To date, we've drilled one well in the northern part of our acreage. That was the 16-2, and that was a pretty gassy well overall. We own a well to the south called the 2811, and that's produced much more oily volumes, condensate-rich volumes. And now we have a third data point in the southern part of our acreage, along with seismic that helps us delineate, where we think we'll see more liquids-rich areas. And it really looks like the southern half of this acreage, based on the data we now have, is much more liquids-rich, and that certainly will help with the overall economics, and we think the overall attractiveness of this play. And it's not just in our federal unit, but as a lot of our listeners know, over the years, we've leased up a bunch of acreage to the south between our play and the black oil field at the Cane Creek. So, we were hoping to see this type of result in terms of the GOR mix, but now that we actually have the hard data, it's a really attractive and beneficial piece of evidence for more value underlying these assets.
What's the next steps for the well and the company, Colin?
Yeah, so immediately on this well, what we are seeing is that we believe we have indications that some of the natural fractures in the vicinity of the well are still plugged up with the mud. And as you might recall, we drilled the 36-2 well here last year, had a well control incident, had to use really heavy kill mud on that well. This new well is very close to the old well. We also had to use heavyweight mud while drilling, so we didn't have any control incidents. And we're seeing some indications that some of our natural fractures, at least a portion of them, are still plugged up, and we're not getting a true view of the overall well. And we see that because we don't see pressures rebounding as we would have expected from our models. So we took a long time to clean this well up initially. We did do a very small acid job at the time to get right around the wellbore and the near wellbore unplugged with mud. That was highly effective. This is a specially designed acid formulated for our exact mud. We worked with Halliburton on it. And what we've decided to do, because we'd like a true picture here, is to do a much larger acid job. The acid will eat into the natural fractures. So it's designed to be pumped at high pressure, but not the pressure that would frack any rock down here. It would move more easily into the fractures and just help clean this up a bit more. So that's a job that we will be planning to do in early to mid-August. We're working through the preparations right now, getting on the Halliburton slot and formulating the right mix. And then we will be doing that and running a second production test so we can try to understand the true potential of this well. So that's what's happening in the near term. Beyond that, we have lots of other things going on besides our non-op, which is continuing to produce really well. We're preparing for a salt wash well. That's the helium gas and oil well just to the south of us that we'd like to drill this fall. And certainly now that we have data from this well, and particularly around the GOR, we're really going to start pushing harder on the broader discussions for how to develop this Paradox acid out. That means talking to more industry partners and strategic partners, thinking about how to accelerate this overall opportunity. So there's a lot going on in the background. We continue to need to test this well so that we can size our infrastructure accordingly, but we're going to do everything we can to get the best data we can. And we'll be out and back to the market shortly with more information on this individual well, as well as the broader play.
I look forward to those discussions in the future. Colin, thank you very much for the update today.
Yeah, thanks, Stephen. Good to chat, and we'll be back soon.
Zephyr Energy CEO Colin Harrington.